China is doing something big, opening up its financial market, banking, securities and asset management, also the newly listed Sci-Tech Innovation Board, the STAR market. China's financial institutions are now facing direct competition from their global counterparts. This is a historic event, and China's financial institutions are seriously preparing for the future. So what do the new measures mean to investors at home and abroad? What are the impacts for the real estate market, and what will be done to enhance the nurturing of talent as China builds a more internationalized financial market and prepares for global competition? To discuss these issues and more, I'm happy to be joined in the studio in the first half of the program by Mr. Bernard Carillon, Chairman of the Board of Directors of Gecina. In the second half, we will be joined by Mr. Vincent Moore, Board Chairman of Fund.com. That's our topic. This is Dialogue. I'm Pando. So, Mr. Carillon, why don't we start with something quite recent and, to be honest, quite historic? For the first time, China now has the highest number of companies listed on the Fortune 500, first time surpassing the United States. And I took a quick look at the top 50, and I found names like ICBC ranked 26th, Ping An Insurance 29th, China Construction Bank 31st, Agricultural Bank of China 36th, and Bank of China 44th. So this leads to a very interesting question. Talking about China's opening of its financial market to the outside world, do you think it's a level playing field for both domestic companies and foreign companies? Or do you think maybe Chinese companies have some advantage on their home ground?
Thank you very much for having me here today. The question is a little bit difficult to answer so quickly and so forth, because for the foreign companies, the most important is to be confident on the whole parts of the financial markets and the business market. And I think that the confidence is made step by step and is a process, a long process to obtain the agreement from the foreign investors. And I think that we are in the right track. I think that right now we can see that the financial companies investing a lot in China, as the industrial companies did for more than 30 years. Okay, we could see a large part of foreign industry is coming to China to invest in China. Germans, French, and British and U.S. companies, of course, are in China. And I think that the financial companies also started a few years ago. They invest more and more, and I think they will invest more and more in China. Of course, playing field, I think that it will be a fair field for everybody in the next years. I'm sure of it. Of course, the legal concept is important also, to be sure that the courts are playing the same field for everybody. I'm sure it will be in the next future. Okay.
So, being specific, what do you think would be the biggest challenges for foreign investors coming into China's financial market?
I think the most important is, if I can say, the most important thing is the quality of the assets. So, and to know exactly the quality of the assets, we need to have a lot of rating agencies, and not only the local rating agencies. Because we have to be sure that we invest in the safe, or we have to know exactly the level of risk of the assets and the counterparty, the issuer of the assets or the stocks. Okay, and so
you just mentioned this
very important
of the quality of the asset.
Yes.
But the problem is that, let's trace back a little bit, maybe more than a decade ago. We know that some rating agencies didn't play a glorious role in leading up to the major financial crisis that almost collapsed the Western financial system.
Yes, absolutely right, because they mix advisory and their own job of rating, because they advise at the same time the structure of the complex of U.S. firms, so see, with barriers and so on. So I know very well the problem, but I don't want to go deeply inside. But you are absolutely right. They gave a AAA rating to something but it was not a AAA rating due to the structure and to the quality of the assets and the like. But so far, I think they understood the problem and they changed their manner to work, and they separate very clearly the advisory to the rating work. It seems to me that is right like that. And so in this market, they will improve the quality of the rating agencies. The local rating agencies did a very good job in the last 10 years, but they have to improve them. And of course, I think that the competition will improve this rating work.
So let's go to another specific sector, that is fund management. And I have to follow your experience a little bit more. I know you work for the ABCCA Fund Management Co-Limited. ABC means Agricultural Bank of China. Yes. So what's your experience working for this joint venture with your Chinese counterparts?
I think my experience is that we understand, we have the same targets. We have the same objectives, okay, to do the business in place. And we have the same also objectives in terms of risk adversity, okay. We have, the only objective is to protect the money invested by the investors, the clients of ABC or the institutional outside ABC. But the most important is we have to protect the money invested by the clients of ABC, okay? And we share exactly the same thinking, ABC people and French people coming from France. And, so I think it's important to understand that. Of course, we talk a lot about how to put in place the systems to increase the risk management, to increase the compliance management. And it's a permanent work, of course, as it was in the asset, it is every day in the asset management business in Europe or in the United States. It's every time the same. But the thinking is, I can tell you, really, is exactly the same from the people from ABC or the people from France.
So another sector-wise, let's talk about insurance. As we just mentioned, China has some very strong global insurance companies, for example, Ping An. So in this sector, do you think maybe Chinese companies are short wing, or they will face something new that they've never experienced, at least on the domestic market?
I think that the most important target of the Chinese insurance company will be the hedging people in China, because it's really a very important thing. And the Chinese people have to prepare their retirement period, okay? And by investing in safe products, because when you prepare your retirement period, you have to invest in safe products everywhere in the world, okay? And in France, we have particularly very safe products for the retirement funds, for the pension funds. Because it's not exactly the pension funds as usually it is said for British or North European people or for the American people. In France, we protect the money for the pensions when the people will be retired. And I think that the main target in China for the insurance company will be this point.
I'm really glad that you brought up this safety question, because it's absolutely crucial to any kind of financial investment. So would you make of Chinese government's recent efforts to deleveraging the whole financial market in recent years? And to be honest, the risks in the financial market is still a major focus of the Chinese government right now.
Yes, for sure. Yes, I was said by people I met in Beijing for many years now, and it's really it's the reason why I say that for ABC people is exactly the same target. And the government, of course, is on the right way to protect the savings of the people living in China. And it's absolutely right. And you are right that the shadow banking is a big risk, because by shadow banking you have the system, because nobody knows who, but the system has financed not only the good investment but also the not good, okay, corporates. And of course in the shadow system now you have a high level of risk of bankruptcies, of course, so losses for the investors. So it's important to manage very clearly, very safely in the shadow banking, yes. But the government has decided it for now 2 years or more. Okay.
So let's talk
on the right track.
Yes, of course. Talking about the right direction, we have to talk about some fundamental guidelines, that is China's monetary policy. According to regulators, China will keep its prudent monetary policy, neither too tight nor too loose, while maintaining market liquidity at a reasonably ample level this year. What does that exactly mean for the financial market and maybe for foreign investors? What's the signal here?
I think the signal is that the central bank will do everything, and will do everything in case of liquidity needs. But they will also try to absorb the excess of liquidity, because shadow banking is coming from excess of liquidity, as in Europe with the QE, of course, and in the other countries where QE is in place. So the QE, the excess of liquidity, increase the real assets value. And for example, is the bad thing is that the real estate prices increases a lot in China, as in Western country, as in US too. Okay, and there is a big problem. This point is a big problem. I don't know if you have another question about this point, but I think that now everywhere in the world, in the US, California or East Coast, in Western countries, in Paris, in London, in the large cities, as in China, the real estate is so high, so expensive, that the young couples cannot buy a flat to start their life, okay, as a new family. And we have the same problem everywhere in the world. So how to authorize or to give the leverage to these people to start their life as a new family, at the same time to stop the inflation of the price in the real estate. So it's a very big question, okay?
And Chinese leadership have been emphasizing that the ultimate goal of China's financial market is to serve the real economy. Again, exactly. What's the key message here for foreign investors?
We have the same question in Europe as in China. How to invest the flow of liquidity in the real economy? I mean, now the real economy is to invest in the new technologies, but I think China is doing it very, very well. But also in the new requests, for example, to invest in the low carbon energy, in the renovation of the whole buildings, offices or residential buildings, to decrease the consumption of energy for heating in winter or for air conditioning in summer. We have to invest a lot everywhere in the world, in Europe as in China, for this insulating, heating insulating. And of course, but we need also to invest a lot in green funds, as for example, Shandong province now is promoting the first green fund in China. It's very important, close to $1 billion of US, okay, to invest to decrease the consumption of coal in the Shandong province. And we should do everywhere in the world this kind of thing, okay, to maintain the high quality of air, to maintain the high quality of the water, to have safe agriculture and safe food. I think that all these activities need huge amount of money, and so I think that we have to find the right ways to send the money in these areas. In Europe as in China, it's the same problem, okay? The same problem.
Sustainability is indeed a
yes.
crucial topic here. So talking about that, what do you think are the lessons can be learned from the failures around the world caused by neoliberalism? Because we know that the absolute free flow of capital is the outstanding character of neoliberalism. But in China, China has its own political, social, economic system.
And traditions.
Yes, traditions, of course. So in terms of nurturing talent and market operations, what lessons China can be learned?
I think, yes, of course, in China, so far, 8 million of people are working in financial business in China. Among them, a lot of them are very well educated. I think a lot of them are, for example, CFA Institute graduate, and is very important. And they are open-minded because they know very well the financial markets and the new points very interesting in the world, so as climate change or pollution and so on. And maybe we need to be, China needs to improve a little bit the knowledge of these 8 million of people, to have a part of them very, very competitive compared to the United States of Europe standards of these people. And I think maybe, for example, the CFA charter holders could be a good way of some other, even the top universities can invest a lot to prepare them in terms of knowledge of risk, knowledge of compliance, knowledge of legal requests, or by themselves or by joint venture with European universities, for example. So I think so, yes.
Right. Thank you very much, Mr. Bernard. Carry on there. You're watching Dialogue on CGTN. Stay with us. Welcome back. Now we're joined in the studio by the founder and chairman of Found.com, Mr. Vincent Moore, to talk about financial implications on China's real estate market right now. Thank you very much for joining us, Mr. Moore. So let's start with some latest news. The China Banking and Insurance Regulatory Commission is set to launch special inspections of 75 banks in 30 cities later this year to crack down on violations by institutions in lending to property developers and home buyers. What's the signal here?
China's property market has always been under regulation from the central government to local government.
Is it because it's always overheating?
We have seen in the past many years the property market has been very hot. Since 2 years ago, the central government has been issuing, restrictive regulations to the property market. Financial measures or financial regulations is definitely one of the key measures to control the real estate market. As you just mentioned, recently the central government, central authorities, they have been implementing those financial regulations, and to make sure the money is not flowing into the real estate market. I think that's really the purpose.
So let's get back to basics. A simple supply and demand. From a buyer's perspective, is the real estate market bullish or bearish, according to your point of view?
Well, China's property market, I think it has been there for more than 20 years, and I'm very optimistic about this market. I think another 10 years, a good time for the real estate market is still there. The fundamental reason is really we have a huge immigration from the rural areas or small towns to the bigger cities. So that's the trend. It's going to continue in the coming 10 years, which means the demand for properties will be still there, will be still high. So, but to make sure this property market is not going to too abnormal, which means the price need to be under control to some degree. The price is going to go up. That's my belief. But we need to make sure the price goes up, not rapidly, which means the price goes up at a reasonable range. To me, 5% annually is something reasonable, for the market. But if it's nationally over 5%, I think the central government needs to do something together with the local government to make sure the price is not go too much high.
So from your optimistic thinking, it would be good news for big cities or first-tier cities, because as you just mentioned, people are migrating from rural parts to urban areas. But do you think that's bad news for second-tier cities, third-tier cities, and even for counties and townships? Because let's go back to supply-demand.
You're right. It is bad news for those small cities. China's property market is not one market.
No.
We call at least 3 markets. One is the tier 1 cities, those Beijing, Shanghai, Shenzhen, Guangzhou, all those 4 cities, and plus some come up cities. And second-tier cities are really those provincial capitals, plus those equivalent cities. We probably have 50 plus of those second-tier cities. And third-tier cities around those big cities, I think, still has a very good future. For those small cities and those cities maybe mid-sized, if they are not close to the big centers, they will not have a bright future. So that's my thinking.
So talking about challenges faced by third-tier cities and cities and townships below that level, have you seen some major problems financial-wise?
Actually, we did in the past. 3 years ago, we have seen there were policies from the central government trying to save those tier 3, tier 4 cities from struggling situations. And the government was successful in doing that. And they have, make sure the stocks are diminished, decrease a lot. So we need to prevent that situation to happen again. Those small cities, the demand is not going to continue. So I think to stabilize those cities is important. The main demand really comes from the big cities.
So talking about risks, do you think the real estate market in China right now is still facing the same old problems 3 years ago, as you just mentioned? So right now, do we need some new measures to really take the situation in control? Because earlier we were talking about liquidity.
Yeah, I think the situation now is much better since the regulation 2+ years ago, because the price is the key things. The central government or all governments want to control, and we have seen in the past 2 years the price has been stable, and some cities are increasing, but it's in a range controllable. So I really do not think we have a very serious or big problem, in the real estate industry. But we need to prevent, those abnormal situations to come out again. We have seen, frankly, since the beginning of this year to the Chinese New Year this year, we have seen it's another round of a hot situation come again.
But now it's more like cooling down situation.
Exactly. Yeah. You just mentioned at the beginning, those policies really trying to make sure the old time, the problem time will not come again.
What about this problem of securitization of real estate development? Do you think that's good news or bad news for developers? Let's divide them into two groups, big players and small and medium-sized players.
Securitization of properties is something have been in discussion for many years, and there was some opening up for the securitization of properties, but it's still a small part of the financial sector relating to real estate.
Do you think that's the right thing to do or not?
Well, I think that's the direction to go in the longer future. It's like property taxes. But for the time being, we all know China's financial market is opening up and step by step. But China's financial market is still under heavy regulation or under control. And China needs some time to go to the point where the financial market can be more opened. So we are doing that. So I would be cautious to in the opening up. We are going to open, but we need to do it step by step.
Do you think that's exactly why the National Development and Reform Commission on July the 12th issued a notice for property developers requiring the proceeds from any new offshore bond issuance to be used only for the refinancing of medium and long-term offshore debt maturing in the next year? Explain that to us, a little bit technical there.
Well, I think it is a more kind of a technical thing in controlling the property market, and to my opinion, it's a more kind of a broad thinking about it. Overall, China's economy is under pressure. All of us know this, and China's economy needs a stable situation going forward in the coming 2-3 years. We are facing challenging situations globally, especially the trade relationship with the U.S. So we're going to make sure the general economy will be in a good situation. So real estate is part of that. If it's not for real estate, we need to think about the general economy. And second, the situation is the property market, the real estate market. So we're talking about China's property market needs to also be under control. So these two considerations together, and I think that's the background of the new policies coming out. So you can borrow foreign currency, but you can only borrow to pay your existing debt. You cannot have a new, increase of your debt to make sure real estate market itself, this industry itself, is safe and it's healthy, and also is going to support the general economy is safe and healthy.
So let's talk about, since you earlier talked about the structural problems in the whole Chinese economy, what about the structural problems in the current real estate development? Since, again, we go back to the rural areas, we mentioned, you just talked about people moving from rural parts to bigger cities, maybe for better career, better livelihood, but do you think that will eventually hollow out the rural part? And we know the Chinese government has been promoting this rural revitalization program. Do you think real estate sector has a role in this national strategy?
I definitely, real estate is not only a part of the strategy, it is the key part of the strategy. Definitely more and more people will concentrate to those big cities, or sometimes we call it a group city development, 城市圈的发展. So that will be the trend. And at the same time, those smaller rural areas or cities, small towns, more and more people will come out of those areas. Those areas will become sometimes empty, eventually in the future. So we have seen that that's the trend globally, and concentration to the centers, to the group city, development centers. It's also the situation. Let's see the Paris area, the big Paris area, and the big London area, and even in Mexico, the Mexico city area. Those areas concentrate 20–30% of the whole country's population. Look at us.
Do you think China now is rethinking, is that the right thing to do or not? Because you can't simply put large portions of population into a very crowded area.
Well,
is that sustainable?
I think that's not right or wrong. It is a trend. You cannot against the rules. Like here, Beijing, Shanghai, we have less than 5% of the China's populations. So the big Beijing area, can we have a big Beijing area which has probably 10 cities around Beijing? That's the big Beijing area. In Shanghai, and can we have a big Shanghai area? We have 10–20 cities around Shanghai. So that is the development. That will be the trend of the group city development. That's what I call it. Frankly, I suggested years ago to the government, telling my suggestions that will be the trend. We need to plan ahead of that. The challenge will be, we cannot simply just develop one city. We cannot use the scale of developing one city to do that. We need to combine social experts, not only the traffic planning expert. We need to combine a lot of experts into the planning. So that is the challenge. We need to plan ahead about that.
Last but not least, let's talk about the role of financial tools in this process you just mentioned, because I just gathered this recent news, and China will encourage the issuance of special bonds by local governments to finance rural vitalization projects as part of efforts to boost the rural industries and increase a farmer's income. How will that work? Explain that to us a little bit more.
Well, China is a socialist country, and the government, I think they need to care about all the citizens of China. The poor area and those people in the rural areas, they are the group of people I think the government needs to take care of them. They need help, they need support. So the strategy from the central government, I think it's right in that direction. But to do that, other than the government, we also need other people, economic players, into this game, into this strategy, like developers. Real estate is part of it. So we have been developing those towns and those small cities, and we need developers to get involved. But in developing those rural areas, we also need to prevent those development into real estate development. So that is there is a balance there. There is also a challenge there. That's, I think, the government needs to address. Right.
Thank you very much, Mr. Vincent Moore from Found.com.
Thank you.
Thank you. And that's it for this edition of Dialogue on CGTN. I'm Pan Zheng in Beijing. Bye.